Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Equity markets are under siege as inflation fears resurface with renewed vigor. The S&P 500 fell 1.1% to close at 7,415.39, dragged down by a surge in energy costs and rising bond yields. Brent crude spiked to $107.97, while the 10-year Treasury yield climbed to 4.56%, signaling that investors are pricing in persistent price pressures. This macro headwind is reshaping capital flows across asset classes, creating distinct divergences in both traditional finance and digital assets. In the crypto sector, BNB is the sole gainer in the CoinDesk 20, bucking the broader trend as the index dropped 2% to 2,184.2 on May 15. While Bitcoin struggled to maintain momentum, BNB's relative strength highlights its utility-driven demand within the Binance ecosystem. Meanwhile, laggards like SUI faced significant selling pressure, illustrating a clear bifurcation in the market where only assets with tangible utility are attracting capital. This divergence suggests that speculative fervor is cooling, replaced by a more selective approach to digital asset allocation. On the geopolitical front, the UK Labour Party has enacted a statutory ban on new North Sea oil and gas licenses. This decisive move sparks immediate political backlash and raises serious concerns about long-term import dependency. As global energy prices surge, this policy shift adds another layer of complexity to European energy security, potentially tightening supply constraints that are already driving up Brent crude prices. In related news, Kuwait's Mubarak al-Kabir port project and ADNOC's 2027 pipeline are reshaping Gulf energy logistics. These infrastructure developments are altering regional shipping routes, directly impacting Iraqi crude exports and influencing geopolitical risk premiums. As supply chains adapt to these new realities, traders are closely monitoring how these structural changes will affect global oil availability in the coming years. Legal developments also provided some relief for major energy players. A Texas jury ruled that Exxon Mobil is not liable for investor claims regarding Canadian oil sands and Rocky Mountain gas project disclosures during the energy price volatility. This verdict clears a significant legal hurdle for the oil giant, allowing it to focus on operational efficiency rather than litigation risks. Looking ahead to today's release, markets are bracing for key economic data that could further influence central bank expectations. At 13:15 Universal Time Coordinated, the United States will release industrial production month-over-month, with a forecast of 0.1% against a previous -0.5%. This reading will be critical in assessing whether manufacturing activity is stabilizing or contracting further. Additionally, at 12:30 Universal Time Coordinated, the New York Empire State Manufacturing Index is expected to show 7, down from 11.00, indicating continued softness in regional industrial sentiment. That's your market briefing. Follow Rumour with AI for daily market intelligence.